In this video, I'm going to go over the Chapter 3 Foundation 15 problem. And this problem deals with job order costing. We're given information about Sweeten Company. And we're told that Sweeten Company had no jobs in progress at the beginning of March and no beginning inventories. So that simplifies our life because beginning inventory is basically zero. And the company has two manufacturing departments. One is molding and the other one's fabrication. We are told that the company started, completed, and sold only two jobs during March. These are jobs P and Q. And that's important because if they started them, they completed them, and then they sold them all, then we have no ending inventories at the end of the period. So based on the information given, we don't have any beginning inventory and we don't have any ending inventory. The following additional information is available for the company as a whole for both jobs P and Q. All data and questions relate to the month of March. Okay, so from the molding department, they estimate that they will use 2,500 machine hours. This is an estimate, and then 1,500 machine hours for fabrication, for a total of estimated machine hours of $4,000. 4,000 units, sorry. And then the estimated overhead costs for the period are $25,000. So we come up with this estimate ahead of time. We, even though we have information here on actual machine hours used and such, this happens after the fact, okay? Keep in mind that at the moment that we're estimating this first part, we don't have this information. We haven't produced the items yet. So at the beginning of the period, we come up with these predetermined amounts so that we can apply overhead easily. And if you notice, their predetermined overhead rate per machine hour is $1.40 and $2.20. So the first question, oh, and by the way, this is information on what was actually incurred. So actual direct materials, actual direct labor costs, and actual machine hours are as such, and we'll use these later on. So let's go ahead and see what question number one is. Sweeten Company had no underapplied or overapplied manufacturing overhead costs during the period, so that makes it easy. Okay, meaning the amount of overhead that we incurred, the actual amount we incurred, is the same as the amount we applied. So that simplifies things. For questions 1 through 8. Assume that Sweeten Company uses a plant-wide predetermined overhead rate with machine hours as the allocation base. And then for questions 9 and on, we're going to use departmental predetermined overhead rates with machine hours also as the allocation base. So we have two options here. The questions 1 through 8, we're going to have one overhead rate, and then for questions 9 through 15, we're going to have two overhead rates given that we have two departments. Question number 1, what was the company's plant-wide predetermined overhead rate? Okay, so when we compute this, we need to have two steps. So to determine the plant-wide predetermined overhead rate, we first have to estimate the cost for each department. So let me scroll up here so we can see. And keep in mind, and this is really important, that these are estimated costs, because there's going to be a fine line between the estimation and the actual cost. So on purpose here, I'm going to highlight this in red because we do not know the actual information. If we knew the actual information ahead of time, we would never do an estimated overhead rate. The issue here is we want to do this estimated overhead rate so that we have a rate that we can apply to products as we make them. Okay? All right, let's look at molding here. We're going to estimate the overhead cost for all the department. Under molding, we think we're going to have fixed cost of $10,000. That would be the A in the formula here. And then given the $1.40 per machine hour, that's this here, I'm going to multiply that times 2,500 estimated machine hours. So when I do that, I get 13,500. 10,000 of fixed cost, 3,500 of variable costs for the molding department. For fabrication, we are told that it's $15,000 estimated fixed costs plus 220 times 1,500 hours based on the estimate of what we think we're going to use. Overall, what we have is estimated cost of 13,500 and 18,300. So when we combine those, that would be the second step here. When we combine those, we have total estimated overhead amount of 31,800 for the month of March. Okay, the question is, determine the plant-wide overhead rate. So for your plant-wide predetermined overhead rate, we're going to take the total estimated overhead divided by the total estimated cost driver. So again, I'm going to highlight this in red so that I drive the point across that these are all estimations. I take the 31,800 and divide it by the estimated total machine hours of 4,000, and we get $7.95 per machine hour. So as we start manufacturing products, what we'll have is we'll apply, for every machine hour that any product incurs, we'll apply $7.95. So naturally, once you have a predetermined overhead rate, which is this here, then as we start producing products, then we can apply every time a machine hour is incurred. And that's the nature of question number 2 here. How much manufacturing overhead was applied to job P and then to job Q? So that's what I have right here on number 2. And the difference here is that when we apply overhead, keep in mind, we're going to apply overhead using an estimated rate, but based on the actual machine hours. So I hope you can see how that differs. Everything that we did to come up with this overhead rate was based on estimates, everything. So that we can later on say, okay, if I am using 2,300 machine hours for product P, then my estimated overhead cost is $7.95, our rate, times those actual hours. So that's where we're going to look out here and say, okay, how many hours did we incur for job P? And that's 2,300 actual hours. Same thing for job Q. We're going to apply 1,700 from the actual amount using that predetermined overhead rate. And what this allows us to do is say, for product P, we're going to estimate roughly $18,000 of overhead. And what this allows us to do is quickly, on a timely basis, put a product cost to this item. If we did not have a predetermined overhead rate, then we would have to wait until the period's over after March, until we get all the bills, and then figure out what the actual overhead is. And that would not be timely. So that's why we do this. This is why we apply overhead. Okay, so now that we applied overhead, we go to question number 3. What was the total manufacturing cost assigned to job P? So very easy. Now that we know that this is the applied amount, then we just include it as the manufacturing overhead applied for the product cost. Now keep in mind that this is the only one that's kind of tricky in terms of estimating the cost of the product. Direct materials and direct labor, those are not tricky. Those are the actual amounts. It's whatever materials you use up, it's whatever labor you incur. And based on that, that's straightforward. But the manufacturing overhead is not as straightforward as that as direct materials and direct labor. That's why we need to estimate this ahead of time. Overall, by the way, the direct materials actual information, that's just given to us. Okay, that's 13,000 and 21,000. Okay, we'll do the same thing for number 4 here. In number 4, well, wait a minute. Oh, I'm sorry. So we just did the total amount assigned to P, which is 52,000. And then in number 4, yes, they tell us if job P included 20 units, what's the unit cost? All right, so we just grab that $52,000 and divide it by 20 to arrive at 2614. That means this is our estimated cost per unit. Okay, and I say estimated again because this right here is based on estimates, not actual amounts, but it is timely. All right, then we move on to number 5, which is the same procedure of figuring out the cost for Q. So what it was the total manufacturing cost applied to Q. This right here is this right here is the direct materials and direct labor that was given to us, 8,000 and 7,500, and then the 13,515. That's the amount we applied to job Q in terms of overhead. Okay, so we did this in question number 2. So we're basically going in there and say, okay, let's estimate that 13,515 as part of the cost of the product, and it ends up being that that job Q is a total estimated cost of 29,000 roughly. All right, so number 6 is asking us if job Q included 30 units, what's the cost per unit? Again, straightforward. Your 29,015 divided by 30 means that now the estimated cost per unit of job Q is $967. All right, moving on to question 7. Question 7 says, assume that Sweeten Company used a cost plus pricing approach. In other words, whatever our cost of production is, like here it's $967, we're going to use this as the base to mark it up, to mark up the sales price. And then they tell us the markup percentage of 80% of total manufacturing cost is the way we compute the markup here. And this will establish the selling price for all its jobs. So what is the selling, what selling price would the company have established for jobs P and Q? And what are the selling price for both jobs when stated on a per unit basis? All right, so we know what the manufacturing costs are. Those came from our computation right here. So for job P, the total cost was $52,000, and that's what I have right here. And then for job Q, $29,000, which is what I have right here. Then I apply a markup of 80% based on cost. So I'm multiplying 52,000 times 80%, and I get 41,828 as the markup. Same thing for this one. I estimate 80% of that, meaning that my total sales price is as follows. 94 grand roughly for P and 52 grand for Q. Let me center this so it looks a little better. Okay, this is on a total basis, so they also want to know on a per unit basis. So if we're going to generate revenues of 94,113 for all of the units, when we divide it by 20 units that we manufactured, we get this. So I'm taking the total sales price divided by 20, and we get a sales price of $4,705.65 for P, and then this $1,700 roughly for Q. That's the sales price per unit. Now, number 8 says, what was Sweeten Company's cost of goods sold for March? And since they told us that there was no beginning inventory, and they also told us that the company started, completed, and sold 2 jobs, then we have no ending inventory either, which means that the cost of goods sold is nothing more than the summation of both production costs. In other words, whatever costs you incurred this period for manufacturing P and Q is what goes out, because you're going to sell them all according to this problem. So cost of goods sold is going to be the summation of 52,000 and 29,000 as follows, which is 81,300. So if you were doing your income statement at this point, you would have something that looks like this. We would have revenue or sales of the summation of these two. So I'm going to sum this one plus this one. So that will be our revenue. And then our cost of goods sold would equal 81,300. And then this gives us gross profit of whatever that difference is. And then from here we would subtract general and administrative expenses, which we don't know what they are, and then this gives us net income, whatever that may be. But but at least you can see how this flows into the financial statement eventually, which is the income statement. Okay, so that covers 1 through 8, which we were told under 1 through 8 we're using one plant-wide predetermined overhead rate. Whereas now under 9 and on, we're going to assume two, in this case two, but it's departmental overhead rates. Okay, so let's go ahead and see what we're being asked for. So what were the company's predetermined overhead rates in the molding department and the fabrication department? So this is going to be very similar to what we did before. We're going to first estimate the costs for each department, and we did that previously. So for molding, it was $13,500. For fabrication, it was $18,300. And that comes from, I think, number 1. So this is where we did the summation of both of these, but now we're going to treat them separately. That's the big difference. Okay, so then we're going to determine the predetermined overhead rate for each department. So if the cost is the estimated overhead cost is $13,500 for molding, we're going to divide it by 2,500 machine hours, which those are estimated machine hours. Don't use the actual, because again, the idea is when you're coming up with this rate, you do not know that it's actually going to be 2,300. You estimate that it's going to be 2,500 from the beginning of the period. You don't know what's going to happen in the future, so you do this ahead of time. So our rate is $5.40 per machine hour. For fabrication, it's going to be 18,300 divided again by the estimated machine hours, which is 1,500, and that's 1220. So as we make the products, every time we have an actual machine hour, that's how much we're going to estimate for molding, and then for fabrication, 1220. So then question number 10, we're being asked to apply overhead. So how much manufacturing overhead was applied from the molding department to job P, and how much was applied to job Q for molding? So this now is based on actual hours. So we're going to go in here, and technically this is not happening at the same day that we do this rate, obviously, right? We end up finding out that we use 1,700 machine hours for molding for P, and then 800 machine hours for molding for Q later on. Okay, so when we did this estimate, we had no idea that was going to be the case. Now in the future, we find out that these are the actual machine hours. So when we multiply times that $5.40, this is how much overhead is being applied to each job. All right, let me scroll up a little bit here. And then question 11 is regarding the other department. How much overhead is applied based on the other department? Here's 11. How much manufacturing overhead was applied from the fabrication department to job P? Okay, and also for job Q. Okay, so when we go in here, that's 11. We know the rate was, the predetermined overhead rate was 1220, so that's what we're going to use over here. But now we need the actual machine hours. What happened? What actually happened? And that it was 600 and 900 respectively. So when we apply this overhead, we end up at 600 times 1220, that's 7320, and roughly 11,000 for Q. These are the estimated overhead amounts. Okay, so then question 12, under question 12, the next thing we want to know is what is the, now that we have the applied overhead, what is the cost per unit for job P and then for job Q if we produce those 20 and 30 units? So we're going to go ahead and estimate that. Okay, so for job P, let's go ahead and begin that. We have 13,000 of direct materials and direct labor. Those are actual amounts that they gave us. But now we're going to include the amounts for each department. So here's 9180. Let me see what colors I used over here, so maybe I could use the same thing. So here's, bear with me here. So now we're going to get 9180 from here, and that's going to be right there. And then for fabrication is going to be 4320. And there's your applied overhead on a per department basis. So when we sum up these totals here, the total cost for job P is 50,500. And on a per unit basis, that's 2525 per unit of cost for product P. We do the same thing for Q. The applied overhead was 10,980 for fabrication, and then for molding it was 7320. So we'll go ahead and color match this just so that we can see visually how it's flowing. There we go. And again, I'm going to repeat this just because I want to drive this point across. Coming up with direct materials and direct labor is a non-issue. Okay, that is whatever it is. The technical part is the overhead. Okay, overhead is made up of a whole bunch of things, and when we apply overhead, we're estimating what overhead is, and based on that estimate, we come up with a estimated cost of 30,800. And then for 30 units on a per unit basis, that's 1,027. Under 14, it says, assume that Sweden company uses the cost plus pricing in the same way that we did before, and the markup is 80% again. What's the selling price for jobs P and Q? Okay, so we know the total cost of manufacturing based on what we just did, 50,500 for P, 30,800 for Q. We mark it up 80%, just like we did before, and our sales price is going to be 90,900 for P and 55,440 for Q. When we calculate this on a per unit basis, what we're charging now as a sales price for P is 45.45 and 18.48 for Q. Having done that, I think it's important for us to see what's going on here overall. When we used a plant-wide overhead rate, notice how the product cost, let me see where that's at. Notice how the product cost for Q and P were as follows. So the product cost for P was 52,285. And then 29,000 for 015, 29,015 for Q. So that's using one plant-wide overhead. So maybe I should contrast that now with what happens when we use departmental rates. So the more you can partition out the overhead itself to different departments, different rates, the more precise you might get the cost of your product to be. And the reason that's the case is because each department works differently and each product consumes overhead differently by department. So let me go over here and see. So the total cost for product P here is 50,500. Compare that to 52,285 from before. So in other words, by using one plant-wide overhead rate, we're averaging out the effects of all departments into one here. So that means we apply 18,285 and then gives us a product P cost of 52,285. Whereas here we're partitioning out and we're appreciating the fact that job P consumes at different rates for molding and for fabrication. So it's heavy on the molding area, but it's lighter on the fabrication area versus Q. So when we do that, we can consider, the actual mathematical computations will allow for that. If you notice, let me show you right here. When we applied molding to product P, notice how it's a large amount of molding costs for the product P because of the fact that it consumed a lot of those machine hours. Yet for product Q, notice how we decreased it significantly because of the fact that it's small amount of machine hours that are incurred. I'm sorry, I should be referring to this 800 right here. Notice how it's much less because of the fact that 800 machine hours is so much less than 1700. And that is reflected right here. You only apply 4320 for product Q. And what that ends up doing is that it ends up giving us a more precise cost per unit. So when we say that the cost per unit here is 25.25, we are getting supposedly a more precise cost per unit than our initial cost estimate of, where is that at, of 26.14 when we use the plant-wide overhead. And that's significant. That's very important, because if you use this plant-wide overhead method and you think the cost of your unit is 2,600, well, when in fact it really should be, let's say, 25.25 the cost. When you go out and sell it, you might overprice yourself, because you might think, hey, I need to cover X amount percentage markup. In this case, they used 80%. But if you base that 80% on this, you might be overpricing yourself, when in reality, you could make money at a much lower amount if we accept that this estimate of cost, 26.14 per unit, is really less precise than this estimate of cost of 25.25. So the moral here is this: when we apply overhead, okay, since that is an estimated amount, it's not always 100% precise, but the more precision that we can tackle, or the more precision that we can use, the better we will the better product cost, or estimated product cost, we will have. And that's key. That's key, because that determines pricing, that determines our profitability per unit. So we want to definitely try to use a method that applies overhead in a more precise way, assuming it's cost efficient, right? So, I mean, it wasn't too much of a trouble to come up with 2 overhead rates. That's not a big deal. All right, and then finally, question number 15 asks, what is Sweeten's company's cost of goods sold for March? Same thing as before, because of the fact that we do not have beginning inventories or ending inventories, then the cost of goods sold is nothing more than the summation of the total product costs. Okay? Now, this is still the same, 81,300, because of the fact that we sold everything we made. So in other words, all the manufacturing costs incurred are going to be expense. But if at any point you don't sell everything, then you're going to be costing out per the new cost per unit structure, which is 25.25 for product P, and then 10.27 for product Q on a per unit basis. All right, this concludes the foundation problem for chapter 3.